Hey everybody, welcome to Mortgage Today for Wednesday, May 1st, 2024, and oh, what a May day it was. UMBS opened the morning up 15 basis points, S&P futures were down 15 points, bonds were roughly unchanged overnight but began to improve modestly after the ADP data came in. Considering the numbers were higher than expected, that may be more of a relief bid or even new month trading since 8:15 is the time of the release, and 8:20 a.m. is CME open. That frequently sees increased volume. All that having been said, ADP no longer a big business when it comes to market movement most of the time. We were far more interested in the Treasury announcement, which too also underwhelmed. Auction sizes remained unchanged in everything 10 years and up. Increases were focused on the shortest end of the yield curve, which is what you'd expect to want as a borrower if rates were really high, but might be lower in a few years. So, floating rate notes. Treasury also announced the buyback program, or rather announced it would be starting the Treasury also announced the buyback program, or rather announced it would be starting the buybacks, first announced back in 2023 at $2 billion per week. It's not a huge addition to the bid side of the equation. Bonds have been barely budged in response. We got the ADP report, so the economy added 192,000 jobs in April, according to ADP. Hiring was broad-based in April, according to the chief economist at ADP. Only the information sector, telecommunications, media, and information technology showed weakness, posting job losses and the smallest pace of pay gains since August of 2021. All in all, across the survey, job stayers saw a pay increase of 5%, down from 5.1. Job changers saw an average increase of 9.3%, down from 10.1%. The street is looking for 243,000 jobs in Friday's jobs report. House prices rose 1.2% month over month in February, according to the FHFA price index. On an annual basis, prices rose 7%. The Northeast and Upper Midwest performed the best. Home prices rose 6.4% annually in February, according to Case-Shiller. We also got ISM manufacturing, which came in at 49.2 on a 50 forecast. It was 50.3 previously. ISM prices came in at 60.9 on a 55 forecast, so quite a big beat there. It was 55.8 previously. Job openings came in at 8.488 versus an 8.69 million forecast. It was 8.813 previously. Bonds managed modest to moderate gains after digesting all of the morning's economic data and events. None of the reports were too exciting, and one might conclude that the traders were slightly more interested in buying bonds regardless of the data. Yields flatlined in stronger territory ahead of the Fed. The announcement itself was largely as expected. The same could be said for the press conference, but with qualification that Powell definitely stopped short of expressing how much concern about inflation as the recent data justified. Rate cuts aren't likely anytime soon, but the next move is still seen as much more likely to be a cut rather than a hike. Markets also appreciated Powell's reiteration that the Fed wouldn't hesitate to do what is needed to do on a basis of data economy without considering political implications. UMBS ended the day up 40 basis points, which was about 15 basis points below the highs of the day. So that 6.0 closed out at 99.46, and the 10-year closed out at 4.621. We also got news from the industry that despite the struggles of its IMB counterparties, Fannie Mae delivered a $4.3 billion in net income during the first quarter of the year, up from $3.9 billion in the fourth quarter of that year. Boy, it seems like with all that money, they could make a lot more efforts to get better pricing and help people get into homes and make it more affordable. But, you know, like everybody else, they want all this great social help, but it needs to be on somebody else's balance sheet. We did get a post from our sponsor, a brand new series at wellthatmakessense.com. This is all about getting things done. So this is from the tremendous book, Getting Things Done by David Allen and James Follows. It's all about an effective system to get more done, which will help you make more money in 2024, regardless of what the Fed does.